Hi everyone, this is Lisa Church, and I'd like to talk with you today about how IRS collection works. I'm recording this right after the October 15th tax filing deadline, and those IRS notices will be arriving soon in the mailboxes of a lot of people. Whether you live in Severn, Maryland, or Anne Arundel County, or anywhere else in the world, the IRS collections process works the same. The focus of my practice in Severn, Maryland is to help taxpayers get in compliance with their tax filings and to represent them before the IRS and the state with their tax collection issues. Let's start with an overview of the IRS collection process. First, you file your tax return. Depending upon whether you're filing for yourself as an individual or for your business or for some other entity such as trust, also depending upon whether you're filing timely or on extension, your calendar year tax return is due somewhere between March 15th and October 15th. If you file your return and you pay all the tax due at the time you filed, or better yet, you have a refund coming your way when you file that return, then you're all done. Next, assuming that you filed your tax return and you weren't able to pay the full amount due, then the IRS will assess the tax owed when your return is received by them and it's been processed. Then comes the IRS notices and demands for payment. The time to process your return and to assess the amount due is quick. These tasks are mainly performed by the IRS computers and it gets faster each year. If you have an amount due on your filed tax return, you'll receive a billing notice in the mail requesting payment of the tax plus penalties and interest. If your tax bill goes unpaid after receiving this first notice of the amount due, then a silent lien on your property arises by statute. This lien attaches to not only the assets you now own, but also to those that you'll acquire later. When your tax bill due exceeds $10,000, the IRS will then file a notice of federal tax lien in public records that puts other creditors on notice of your debt. Keep in mind, though, that a lien is not a levy or a seizure. The government hasn't taken anything from you, but it's just protecting its interest or its right of priority on your assets over other creditors. Next, assuming that you still haven't paid your amount due, a final notice of the IRS's intent to levy on your income and your assets is mailed to you. This 30-day letter, as it's called, begins the statutory 30-day window for you to request a collection due process hearing. You have 30 days to appeal the collection action against you. If you don't believe you owe the tax amount assessed against you, this is not the time to stick your head in the sand. You need to take advantage of your rights to appeal. Last but not least, if you don't file an appeal during the 30 days after you receive your final notice and you still haven't paid your amount due, the IRS will begin seizing your assets. And yes, this process is completely legal. The government is not lenient when back taxes are owed and when taxpayers aren't making an effort to either pay them or to appeal. So it's given the IRS the means to collect the tax debts owed. This high degree of collection authority allows the IRS to garnish your wages, clean out your bank accounts, and seize your property, cars, boats, houses, IRAs, whatever. This process of enforced collection will continue until you seek to resolve it on your own or preferably with the help of a tax professional. There are 3 steps to resolving your tax debt with the IRS. Step 1 is to get compliant with the tax rules. Start by filing those returns you've been avoiding. If you haven't filed in several years, filing compliance means that you've filed returns for at least the past 6 years. Keep in mind that you just have to file the returns, though. The tax doesn't have to be paid. The next requirement in order to be considered tax compliant is to have paid your current year taxes. If you're an employee, this means that you're having taxes withheld from your paychecks. If you're self-employed, it means that you've been making your quarterly estimated income taxes based on your business net income. If your business has employees, you'll need to have made your current quarter payroll tax deposit. Again now, being compliant doesn't require you to pay off old tax debts, so hold off on throwing any money at those for right now. Step 2, contact the IRS. This allows you to start negotiations. If you've called the IRS anytime during the last few years, you'll already know that getting a person on the phone isn't an easy thing to do, and that it requires lots of time and patience. If you received an IRS notice in the mail, then you should call the number on the notice. This will be the quickest way to speak with the IRS representative who can help you. Otherwise, there are a couple of main numbers that you can use in reaching the IRS. For individual tax issues, you can call 1-800-829-1040, and for business tax issues, call 800-829-4933. If you value your time and your money and you want the best outcome possible, you should have a tax representation specialist contact the IRS for you. Whether you or your representative make the call, the IRS needs to know that you filed your missing returns for the past 6 years, or that you're in the process of filing them, and that you've made your current tax payments, whether that's as an employee, a self-employed person, or a business. Most importantly, the IRS needs to be told that your goal is to make a proposal toward resolving your tax debt, which leads us straight into step 3, which is to propose a tax resolution to the IRS. Once you make the call to the IRS, you'll probably be pleasantly surprised to find that you've reached someone who's more than willing to work with you in resolving your tax debt. Depending on your amount owed and on the current phase of the collection process against you, you'll be given assistance just by making the effort to call. This assistance may come in the form of extra time to get in tax compliance and possibly even a hold on levy action while you're doing so. This is where a tax resolution specialist can greatly benefit you. Before the IRS will consider any of the resolution options available to you, a Form 433 Collection Information Statement has to be prepared. Based on the results shown on this statement, you'll have one or more tax resolution options, including currently not collectible. This is also called uncollectible status, and basically means that you're just not in a position right now to be able to pay anything at all toward your tax debt. Another option is an offer in compromise. These are awesome, but they're not available to everyone since they're based on your inability to pay in full. If you qualify, you're able to make an offer to settle the tax debt for less than the amount you owe. The last option I want to mention is an installment agreement. These are payment plans that allow you to pay either the full amount or a partial amount of your tax owed. Depending on the results of your Form 433 Collection Information Statement, as well as on the total amount you owe and the time left over which the IRS can collect from you, there are 3 types of payment plans: the regular, streamlined, and partial pay. I'll just mention them briefly here, but we'll get into the details of each payment plan in the future talk. Even though there are several options available to you when you owe taxes to the IRS and or to the state, navigating the maze of forms and requirements when you have a collection issue can be confusing at best and potentially nerve-wracking or frightening. If you need help getting in compliance with your tax filings and in dealing with your tax payments due, whether you're in Severn, Maryland, or anywhere else, please contact me by email, phone call, website, snail mail, whichever you prefer. I've given you all my contact information on this last slide and would be happy to represent you with your collection issue. Thank you very much for listening, and I hope this has been helpful for you. I'll see you next time.